All right, Bulls and Bears, we're back with another dose, BX4 News, another dose of economic reality. Let's go ahead and get right into it, folks. We've got a lot to get caught up on. The economy is deteriorating like never before. We've got a massive spending package that was just announced by this administration that's going to increase the debt massively, increase the budget deficit. There's no other way out of this but to continue spending, and not just continue spending, but to actually ramp up the spending, right? We're going to get into that. And we're going to talk about some people within this administration now kind of butting heads on what's happening, because we were supposed to see cuts. And of course, we did see a lot of layoffs, but we were supposed to see cuts. But yet, I told you months ago that we're not seeing the debt slow down. We're seeing the national debt, for example, continue to accelerate. It continued to go up. I believe we're close to $37 trillion now. So it's just more spend and pretend. And many of the things that we were being told that the cost of living was going to come down, none of it has happened, folks. So we're going to get into all the details. Let's go ahead and start right here. Consumers are spending money, but are they really spending money that they have? Or are they just borrowing money and finding new ways to finance things? Well, take a look at this. You've all heard of the music festival. And I should have covered this was it a month ago, 2 months ago, when Coachella was happening. This was the music festival out here in the desert in California. And somebody emailed me this a few weeks ago, but I just checked my email. So sorry, I'm very behind on my emails. I'm months, almost, probably 2 months behind on my email. So I rarely check it. That's why I don't give out my email address. But people that still had my email address from before, when I used to give it out, they still have it. So sometimes they'll still send me articles. So take a look here if I could find it now. Coachella Music Festival. Look at this. This is insane, folks. Often what I'll hear when I say the consumer is struggling is people will say, no, consumers aren't struggling. We see people at the mall, people at the concerts, people taking vacations, driving on the airplanes. Folks, that's because people are doing this on credit. They're doing it with credit, and not just credit. Now they're doing buy now, pay later for buying groceries, for dining out. And what does that mean? Well, when you pay with a credit card, you're paying it later usually. But this is even worse. Buy now, pay later usually finances it over several months, like sometimes up to 6 months for even a small purchase. Look at this. Most Coachella attendees bought their $600 tickets this year for Coachella with buy now, pay later, folks. How crazy is this? Buy now, pay later for concert tickets, right? This is crazy. $600. So most of these people, about 60%, paid using the festival's buy now, pay later option. I'm sure you've all seen it. You go to buy something online. Don't pay for it now. We'll finance you for 6 months, interest free, 6 easy payments, whatever, right? So think about that, folks. That's just a concert with a lot of people there, but everywhere you go, these people are enabled, for the most part, these people are enabled to do whatever they're doing: shopping, buying things, traveling, entertainment, going to bars, clubs, etc. They're enabled because of debt and spending money they don't have. And if you look at every quarterly report, the debt continues to go higher. We're waiting for the day where the banks are going to say, stop, no more. We can't give out any more credit, because ultimately the banks should be worried about people defaulting, but that's been taken off the table because the banks are always going to be backed up and backstopped. We know this. So that's how we know that the biggest problem and the biggest fear that people should have is inflation, not some sort of deflationary crash or collapse like people are hoping for. A lot of people want to crash. They want to collapse. They want the housing market to go down. They want the housing bubble to bust. They want the cost of living to come down. They want to pay what they paid for vehicles 10 years ago. They want those prices to return. But I think people are in for a rude awakening unless something drastic happens with the banks, which, again, they're not going to allow to happen as far as we can see. Prices are just going to keep climbing, folks. Yeah, we might see some ups and downs and some decelerations in the acceleration, or some decelerations in the increase. But for the most part, folks, this is inflationary. And again, if you took away the borrowed money and the ability to borrow money, the concert hall, the concert venues, Coachella would be more than half empty. I mean, probably half the cars on the road right now wouldn't even be on the road if it weren't for borrowed money and credit cards. All enabled by the banking system, folks. Now, if you went back to some sort of limitations on the money that can just be loaned out, such as back to a gold standard like we had over 50 years ago, you would see this happen right now, folks. Markets would come crashing down, home prices would collapse, the streets would be half empty because no one could just borrow money just based on the money just being created out of nothing. It would be something that would have to be earned, and therefore you wouldn't be able to just borrow so much money. You know what I'm saying? So it would be very painful at the beginning, but ultimately it would be beneficial because it would bring the cost of living, it would bring the price of everything down massively, massively. All right, let's move on here, folks. By the way, was anyone here at Coachella? I heard that it was like 45 minutes just to use a porta potty, and that people were camping out for days. People were stinky, and you had to wait like even longer for a shower, like sometimes 2 to 3 hours. You had to wait in line just to take a shower. I heard it was massively nasty, is what I heard. And then before I move on here, I also heard that a lot of the performers did all these nice dance routines, but a lot of them looked like they were lip syncing. That's just what I heard on the street through the grapevine. And also, towards the end of this report, we're going to get into a little bit of entertainment news regarding a well-known sports figure, a well-known basketball player who's retired now, but can't even afford to pay their own rent now after being on one of the biggest basketball teams. It was a Lakers player. Right? We're going to get into that here later. But first, what's happening in retail, folks? Dollar General posts record sales as bargain stores attract more people. We told you the Walmarts, the Dollar Generals, they're soaking up the business because less people go into Macy's, Best Buy, and even Target. All those stores have basically come out and said that if there's weakness from the consumer. But Dollar General set a quarterly sales record for $10.4 billion and upgraded its annual profit and sales outlook as Americans tighten their budgets and spend more at bargain stores and off-price retailers amid economic uncertainty. That's how the AP is putting it. And let's see what they talk about in here. Shares have jumped also. Dollar General. Other stores, though, that are not so optimistic and are not really doing that well. The ones I mentioned, Best Buy, of course, Macy's. We're seeing a lot of those locations close and shut down, those types of operations. And I'm really surprised here in San Diego. We don't have any Dollar Generals that I know of. I thought that once the Big Lots went out of business, that we would see some Dollar Generals popping up in some of those locations. But no, we have them in Riverside, up in the Inland Empire. Seen some of them in LA County, but none here in San Diego that I know of. It's pretty interesting how they choose different regions to operate in here. All right, folks, what else is happening? Well, we got the OECD out there slashing economic growth forecast because of the tariffs. Does anyone care if growth slows in the economy? I don't think anybody really cares. I think people want prices to come down. And that would really make it look like growth is slowing if prices came down because people wouldn't be spending as much. And the growth is based on how much people are spending, and most of that spending is borrowed money. So I don't think anyone would complain if prices came down, except maybe people that are in the business of selling things, like the realtors and people that make commission and get bigger commissions on high values, right? So especially to see that in the real estate market. But overall, a cost of living coming down, lower cost of living, I think would be much more popular than continued prices increasing. But remember, and we've talked about this a few times here, the economic uncertainty, the tariffs, all the things that we've talked about over the past few years that have led to inflation, supply chain disruptions like we saw, of course, several years ago with the health crisis. All these things are excuses for companies to raise their prices, for car dealers to raise their prices, because what do we see happen over the past few years with inflation? Well, we saw also profits increase, right? for a lot of these retailers, right? Now it's starting to reverse now because a lot of people are so loaded up on debt that they're starting to be more discretionary on their spending. But previously, over the past few years, we saw record profits, car dealers raking in the profits, a lot of the biggest companies raking in the profits. And what we notice is they raised their prices much more than they actually needed to, using the excuse of, oh, look at the supply chain disruptions, inflation, higher materials costs, higher manufacturing costs. And now they're going to use the higher import costs because of the tariffs. They're going to use that to raise prices even more than the tariffs, right? So if there's a 25% tariff, you might see them raise their prices 35, 40, 50%. And then they can just say, oh, sorry, we had to raise our prices because of the tariffs. But when you look at the amount of the price increases, they're going well above and they're outpacing what the actual price increases because of the tariffs are. You know what I'm saying? And a word that's been thrown around for that is greedflation, right? So it's not just inflation because things cost more and making these things cost more. No, things are still made mostly overseas for pennies on the dollar, but companies are still charging more with the excuse of all those things that we just mentioned. All right, people, now I want to touch on something real quick here. There's been a few people saying, that I put out this news, that I don't give any solutions. Folks, every once in a while, I'll talk about what I'm buying, what I'm investing in. If you've been on this channel over the several years, you've made some amazing profits here. Let me just give you one that I've talked about over several years. A crypto called XRP. Let me just bring up a chart. Folks, even before 2021, I told you guys to buy this, and I told you that I was holding it and buying more back when it was 17 cents, folks. Now it's $2.25. What's that, a 10 times increase? No, more than a 10 times increase. It's like maybe a 20 times increase, folks. That's pretty good. I also told you guys to buy it here, that I was buying it. I didn't tell you to buy it, but I told you what I was buying, and I told you that. I told you silver. And along the last few years, when it was like between 30 and 50 and 60 cents, and it just bumped up here. Now I'm not buying it. If you look at this chart, let me bring up a bigger chart here. I'm not buying it now. I'm waiting for a pullback. So I'll be buying this again here when it pulls down to about $1.60. I'm looking for about a 20 to 30% pullback in the price. I'm not a buyer of this now. I was over those years, but the people complaining that they're not making any money, that this channel is not really helping out because knowing the news is not helping because we're not investing. Yes, you got to watch the channel. I mean, I'm not going to say this every video, but I'll let you know when I think there's a good buying opportunity out there. I'll be completely transparent. I've had videos where I've laid out my entire portfolio and what I'm invested in. And most of you know, if you've been on this channel, I'm mostly in cash right now because I think things are way overpriced. And one of my biggest fears and concerns is they're just going to keep pumping up these bubbles bigger, and people sitting on some cash waiting for better buying opportunities are not going to get the opportunity because things are just going to continue to go higher. I think ultimately there's going to be a correction, and I think there's going to be some news coming out that's going to be quite shocking. And I thought it was going to come out last year, and I expect it to come out this year. But again, I don't put timelines on things because no one can predict exactly when these things are going to strike. The black swans, the world-changing events that bring markets down, that cause fear, panic, and anxiety. Like we saw the health crisis in 2020 that they, by the way, they should have been deflationary, but they came in with all these programs and kept everything propped up and made everything even more expensive. Most of you know this, right? All right, moving on here, folks. We got a couple big names out there in the financial world. We had Jamie Dimon, JP Morgan Chase CEO, out there talking about there's going to be massive shock because of the bond market. We've got Ray Dalio out there now. We should be very afraid of the bond market. And basically the fear is that a bunch of countries are going to get together, investors, and dump U.S. debt, and we're going to see interest rates spike because no one wants these bonds, no one wants these treasuries, and therefore the yields are going to spike and cause interest rates to spike. Other people say that'll never happen because the central bank, in this case the Fed, would just come in and buy everything, right? And I'm hearing some words that they're not going to be doing that things are changing, that the Treasury is now merged with the Fed. There's those rumors out there. Are they rumors? Are they not? Or is there more risk now? I do see a lot of risk. I do see a lot of risk, and I'm waiting for the breaking moment. But in the meantime, unless something changes, we're going to continue to see the cost of living and asset prices and markets go higher, in my opinion. All right, folks. Let's move on to this other news that I talked about, which does have to do with the economy, but also a little bit of sports/entertainment, if you will. Lamar Odom, remember him from the LA Lakers? Not sure what other teams he played for, but he was in the NBA for a while. Former Lakers champion, reportedly evicted from LA residence for failing to pay $45,000 in rent. How crazy is this, folks? How insane is this? Not that you can't pay it. I mean, everybody, even millionaires, some of them go broke. People that win the lottery, you see stories all the time about lottery winner blew their money, now they're broke again. How many millions of dollars did this guy make, Lamar Odom? But $45,000 in rent. The fact that he's paying this much, the Lakers forward was evicted by his landlord. So you played in the NBA for many years and you can't afford to buy a home. How's about move out of LA or move to a lower cost part of LA, right? He had back rent of $45,000. The 45-year-old had entered into a verbal agreement with the Executive Recovery Group, the sublessor of the mansion in Studio City. So he had to have a mansion, right? Because you got to look the part, right? Even if you don't have the money, you got to look rich. In December to pay monthly rent of $15,000 due in the first of each month. Why would you want to pay $15,000 in rent? Especially if you don't have the money. This is crazy, folks. People just want to have a mansion even though they really shouldn't. People want to look the part, but they don't want to. They want to what? They want to talk the talk even though they can't walk the walk. Is that what we say for this? Former NBA player, folks. This is crazy. So what are average people doing that's similar to this? I think a lot of average people are also trying to look more wealthy than they really are. And as long as banks are loaning out, this can keep going on for a while. As long as people can keep moving their debt around from card A to card B, balance transfer, debt consolidation, repayment plans. But those days are coming to an end, folks. This administration is putting a lot of changes through, of course, and some of the music is stopping, right? So on the musical chairs game, the music has stopped for a lot of people. Look at the student loans. Students right now having to repay these loans, and a lot of them having a tough time. We're already seeing credit scores tank. We see now wages being garnished now for people not paying back these loans. We're seeing Social Security is threatening to be taken for student loans. Believe it or not, people that are collecting Social Security that are up there, at that age, still have student loans they're not paying back, folks. It's this debt situation is a disaster, but you really wouldn't know it because when you look around, again, people are spending money, buy now, pay later to go to concerts. More than half the people at Coachella had to buy now, pay later, basically financing concerts and entertainment, folks. What else are people financing? Everything, travel, shopping, even buying groceries now. Buy now, pay later. It's a big thing. It used to be just credit cards and loans. Now it's buy now, pay later. What's next? Financing groceries for 10 years. I mean, I'm joking, but I'm kind of not. Let me know about this down in the comments, folks. What do you think about today's report? The people at the concert financing buy now, pay later. The predictions of the bond market implosion, Ray Dalio, now on the back of Jamie Dimon. What else did we talk about today? The basketball player who wanted to still live in a mansion even though he couldn't make his rent, but he tried. He tried to stay in there for as long as possible. Let me know, people. See ya down in the comments. Please, I'd like to read your comments on this. As always, keep stacking. Bye for now. Peace.